Hey everyone, in this video I'm going to bring you one really cheap dividend stock you can buy right now that I think will pay off longer term. So let's get into this video. I'll share with you what the dividend stock is and why I'm recommending it as a buy.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, the dividend stock that I'm recommending that's down 37% off its high is eBay. eBay is the dividend stock I'm recommending. So let's take a look at why I think this is a good investment. Starting with the latest developments. So in its latest quarter, revenue of 2.6 billion was up 2% year over year, and gross merchandise volume was up 2% as well. Importantly, eBay runs an asset-light business model. It doesn't own any of the inventory on the platform. It just brings together buyers and sellers, and it takes a fee for each transaction on the platform. Now, industry-wide, those fees, the transaction fees, have been rising, signaling decreasing competition. And if you've been following my channel, you know how important competition is to industry profitability. Other industries like electric vehicles are struggling because competition is intensifying, hurting profitability for everyone in the industry. It's the opposite here for companies like eBay. You look at eBay, Amazon, Etsy, Shopify, all these companies are raising the fees they charge on the platform, making it easier for everyone in the industry to generate profitability, and that's been great news. That's one of the reasons why I'm attracted to eBay, in addition to the asset-light business model and the cheap valuation. For the full year, revenue of 10.1 billion was up 3%, and net income from continuing operations was 2.8 billion. And here you get to see the lucrative business model when it's such an asset-light business model. The company made 2.8 billion in profits on 10 billion in revenue. That's roughly a 28% net profit margin. That's a really, really strong net profit margin, and it's made possible by this asset-light business model. eBay doesn't need to deal with the expensive logistics, the fulfillment, the shipping and handling. All of that is really expensive, and it brings down profit margins. eBay doesn't deal with that. It just focuses on bringing together buyers and sellers. Additionally, on 10 billion in sales, the company generated 2.4 billion in operating cash flow and 2 billion in free cash flow. So what does that mean for investors, especially passive income investors? The company was able to return 1.9 billion to shareholders, including 1.4 billion in share repurchases and 528 million in cash dividends. Since the business model is asset light, when the company generates cash flow, it can return it to shareholders because it doesn't need to bring it back into the business maintenance and growing and adding warehouses, adding logistics, adding planes, vans, trucks. Doesn't need to do all that. So when it generates cash flow, it can just give it back to shareholders. That's the beauty of the asset-light business model. And longer term, eBay's been capitalizing on the advertising. So first-party advertising, 368 million in revenue in the fourth quarter. That was up 33%. That's more than 10 times the growth of the business overall. Overall revenue increased by just 3%, but ad revenue on the platform increased by 33%. Ad revenue is incredibly lucrative, very high profit margins in advertising revenue, and companies like eBay, Amazon, Etsy, and others are benefiting from increasing demand for digital advertising. Think about it. If you're a marketer, wouldn't you want to place your advertisement on eBay where people are just about to make a purchase? They're looking to make a purchase, and so if you show the right advertisement, they may choose to buy your product on eBay instead of a competitor's product. So those types of ads result in sales more quickly. They're in closer proximity to a sale, as I like to call. And of course, Amazon has the best one, right? One click away from a purchase, but eBay is right up there. It's doing really well in this regard, and this category, I feel over the next 5 to 10 years could really boost eBay's profitability. Even if revenue growth overall remains sluggish, ad revenue could really add that nice growth element for eBay, which is not a growth investment. eBay's not a company you invest if you're looking for growth in revenue and top line. This is not where you look for growth at, but this specific category could deliver that nice incremental growth to eBay stock investors who would otherwise be difficult in finding growth for eBay. Now, I know dividend stock investors, one of the most important things they look at is the dividend yield, and eBay offers investors a dividend yield of 1.98%. Remember, eBay only started paying a dividend in 2019. And I highlighted all the reasons why eBay could become an excellent dividend stock, because the asset-light business model, the strong profitability, and the cash flow the company generates, it can return to shareholders. So it just started, and I wouldn't be surprised if it continues increasing its dividend per share for the next 10, perhaps even 20 years. Cash flow from operations over the trailing 12 months at 24%, again, highlights the company's ability to generate strong cash flow from operations, turning sales into cash flow, because there isn't very much in between those two where the company needs to spend those sales. So it can just take those sales, convert it into cash flow, and then return that cash flow to shareholders. I love that process possibility for eBay. Now, looking over the next 5 years, analysts on Wall Street expect eBay to grow its earnings per share at 7.68%. 7.68%. Now, that's not incredible earnings per share growth, and that's not something to run home and tell mom about. But when you're paying a cheap valuation and you're getting this kind of earnings per share growth on an asset-light business model, which is less risky, then I think that's a really attractive proposition for dividend stock investors. In fact, eBay is trading at a forward price to earnings of just 10.14. That's a really cheap valuation, and there's a reason why it's cheap. You're getting a company that's not growing, and growth is extremely limited for eBay, and that's going to be the case for the next several years. There's little areas for growth except for in that advertising area, which is still a small part of eBay's overall business. So that's why you're getting this cheap valuation. But I think the profitability, the earnings per share forecast, and the asset-light business model makes this an attractive opportunity for passive income investors looking to generate dividend yields on relatively safe and cheap dividend stocks. So for that reason, I think eBay is an excellent stock here to buy on this dip, on this cheap valuation. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.